So what do you do on days like today when the market really drops a lot? You cry and you duck under a bed and you keep crying and you tell your friends you can't come out and play. No, obviously I'm just joking, but we're going to talk about today's market action, what I think about going forward, and how to handle it. So stick around. It should be a really good video.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy day after Liberation Day. I hope you all feel liberated and good. So, how do you handle big down days like today? Hopefully, what we talked about in my other video about, prepare for the worst but hope for the best. I hope that everybody sticks with that scenario where you're prepared for big down days like this. And quite honestly, I wouldn't be shocked to see some follow through throughout the rest of the week. Unfortunately, despite the dollars and the amount that it moved seeming pretty significant, the market still looks pretty orderly, which worries me that we haven't seen the real panic yet. At the same time, there are things that could come to the market to save it. And my best advice is hopefully you have some money on the sidelines that either you're slowly deploying or you're waiting to see what you're looking for to deploy it. And you continue to buy as the market goes lower, and you don't put yourself in a bad position where you can't live your life. Now, as always, this is not financial advice. I am just a guy on YouTube sharing the information I've learned over the years and sharing what works for me, which does not mean it necessarily works for you. So by all means, reach out to your financial advisor as well as do your own research for what fits your portfolios and your needs in life. Now, that being said, you want to be in the position that if we do see panic and there's a real crash, that you can actually afford to dollar cost average and continue buying. What did I do today? I thought of the companies that shouldn't really be impacted by the tariffs, and then I hope that there's not a huge recession. I actually bought back in and added on to Netflix, which I don't really see how the tariffs are going to impact them too much. Maybe there's something I don't know. Really, I don't mean that naively. It's not like I've delved in to know what they purchased to be able to run their business. But for the most part, what I see is a web type of business that just sells content for people to be able to use, and people pay monthly for that. I'm not sure why that would fall off unless we do fall into a big recession, which there is a risk in that. And I do think, despite what the betting lines like shot up on it, I don't think it's gone that far. I think people tend to always overreact. But to be fair, it has ticked up, and there's a bigger chance because we don't know what the outcome of the tariffs are going to lead to. Really, there's no way to get into Trump's head and know what he's thinking and what his plans are with the tariffs. I think there's a little bit of shock and awe. I think he likes to have that where he seems a little unstable and people think he could do anything. But I'd also like to think if things really got out of control, he would backtrack. Now, it's possible that isn't the case, so I don't know, which is why I say prepare for the worst, hope for the best, because there are other things at play that I talked about in another video, which is it's possible he doesn't care what the equity markets do, that his only goal is to get the interest rates lower, which he's having some success on, to be able to fix the commercial real estate market. Don't know that he'll have success in that. I don't know that that's some ulterior motive. It's just one theory that does make sense to me. So we could see continued pressure to the downside until the rates improve. And to be fair, one of the things he talked about when getting into office is he was going to get interest rates lower to make housing more affordable. If the stock market really has followed through to the downside and you see a slowdown and earnings come down and it really slows for an extended period of time, it's hard for me to see a scenario where that would happen and you don't see house prices come down as well as interest rates. Now, I think in that scenario, you probably see a pretty big uptick in unemployment as well, which would be a concern. But I don't see a Great Depression like the 1930s. I've made the correlation in yesterday's video about what's the same with the tariffs and us trying to bring industry back to the US and so on and so forth. But where it differentiates is you didn't have the social programs that you have today to help the people that might get into trouble if the economy really stalls out. I also think they have an ability now to print money differently and give people jobs if we really went into a recession. They've learned these things from things like the New Deal that a lot of us learned in school. So if the economy really started to crap out and the stock market dropped and housing dropped and interest rates were coming down, I am guessing you would see new roads start to be built and potentially new fire stations or police stations or schools or whatever it is to be able to give people jobs and drive industry and put money in their pocket. And you'd probably see a weaker dollar at the same time, but most people aren't paying attention to international trade. But I think that's why you've seen the dollar kind of do the opposite of what a lot of people thought with the higher tariffs. It's interesting to me to see the yen getting stronger and the dollar getting weaker. But to be fair, the currency was in like a 40-year transition of going to the yen being really strong to the yen being really weak. In my mind, we finally hit a level that it should reverse, but I thought that a year or two ago, and I put a little money in the yen markets, and partially because we like to travel there, but that's a separate issue. And my thought was that was probably a really good price, and I've seen the price get a little bit worse, but kind of sit where it is. 40 years is a long time for a trend, and currencies trend a long time. Forget what's going on with the tariffs and everything else. I'm not shocked to see the yen strengthening finally because I thought it had gone so far already. So I wouldn't be surprised to see the dollar continue to weaken against other currencies. But markets are markets. It's not really a prediction. It just wouldn't be a surprise to me because I feel like they've overshot and the dollar has gotten too strong, and it's been that way for a few years. I guess we'll see on that one. So the other thing that I did today is I sold a put in QQQ and I sold another put in VOO. I did them about 10% lower than where the market is currently for about a month out. And my thought process is if the market drops another 10%, even if it's chaotic and whatever else is going on, I'd be happy to buy 100 shares of each, 10% lower. And in the meantime, selling those options collected about $900, which is 1% return over like a month and a week. If I annualize that, that'd be pretty good return to not own the stock. I mean, my real hope is we don't shoot down another 10% and I don't get filled on the options and I just get to keep the money from selling them. I guess we'll see. At the same time, I thought it would be a good way to scale in if the markets got really chaotic. 10% is a nice big move, even though I think legitimately, if we ran into a recession and things really got worse, we could easily see a 20 or 30% correction. To be fair to what I'm listening to on CNBC, I kind of feel the same way, which is I don't really think we're going to have a massive recession. But I also can't read Trump's mind. I don't know how far we will push with the tariffs, and I don't know the repercussions they'll have. I really think it'll take 6 months to a year to see how they work into the system and if it causes a slowdown. Half of me thinks we'll see prices go up and people continue to complain because prices go up, but that the market's stronger than people realize and actually earnings could do quite well. And in that scenario, you wouldn't see housing fall and the other stuff I talked about as well. I just, there's no way to really know. And if he pushes too far, you could see a real recession. So be prepared on either side. I know that's not great advice because it's like, well, what's he saying? Is it going to go higher? Is it going to go lower? What I would say is if I hadn't sold before today, I don't think I would be selling into today's sell off. And I still think we probably have follow through to the downside. So somebody might be thinking, well, if you think it's going to go lower, why wouldn't you sell today? And my answer to that is timing the market is very tough, which is why that slogan, time in the market, is more important than timing the market. And unless you're constantly watching it and you're super comfortable about your ability to see the ups and downs, and you don't let panic and fear impact anything, to sell now when it's already moved significantly and risk that I'm wrong and there isn't more downside not volatility, but follow through, and the market catches here, which is not really what I expect. and starts going back up, to not be invested is way too much of a risk to sell here. If you are invested too heavily, well, you should think of that anyway and correct either way, whether the markets are here, higher, or lower. You don't want to wait until you're in a position where you have to sell. Like, you want to sell because you want to sell something. You don't want to put yourselves in position where I need to sell because I need that money. Because I do think over a 5 or 10 year time frame, a company like Target, that I think is even cheaper today than it was yesterday, even if we have a recession, even if their earnings drop, so long as they're in position to be able to continue to pay that dividend and eventually be able to grow business again, I picture that 5 or 10 years out, a company like that will do just fine and will be worth more money than it is today, despite that I think it could and probably will go lower from here. Now, if I was going to put, I'm going to pick a bigger number just because I know where it's trading. If I was going to put $50,000 into Target, well, I would have no reason not to buy 100 shares today. And that way, if I'm already long and I'm wrong about it getting cheaper, at least I have something in the trade. And as it goes lower, it gives me ammunition to be able to continue to buy, as long as nothing changes with the earnings and it doesn't look like something that I'm worried about anymore. The only thing I would be keeping an eye on, me personally, is the cash flow in terms of affordability of paying out that dividend. Because the way I look at it, when I look today, around $95 a share, they pay a buck 12 a quarter. That's 448 a year. When I did the math, don't think I can do it in my head this quick. I'm usually really bad at that stuff. It was like 4.7%. Well, at this point, treasuries pay less than that. I would rather take the risk of Target at 4.7% yield, paying out a dividend that only uses 50% of their free cash flow, so that I'm getting a better return than if I put it in the treasury. The risk is the value of Target goes down and the overall investment is worth less money over time. But I would take that risk because my hope is Target actually does better over time, and to me, I would rather own that than a treasury, which is 0% risk. I don't mind taking on a little bit of the risk to get a little bit better return. And then I hope I really beat the return pretty good by the stock price, hopefully in time being higher as well. That's what I see. I see it creating opportunity. I see that it feels like it's not done. I wouldn't be thrilled about a V bottom as much as I'd be excited to see the account go up, because what I worry about is if we shot up from here, that we haven't gotten the froth out and we could have an even bigger and uglier correction. The other thing is, the reason I don't want to sell here is, what happens if the news starts saying we've already made some headway with some of the partners who we trade with, that they've come to the table and either they've lowered their tariffs, or they're comfortable with it or whatever, where we had a conversation and all of a sudden everybody's hunky-dory and everything's all good. I think that could cause the market to start going back up and really catch me off guard. So that's why I don't want to sell today after we're already lower. If you sold previously, great. Um, if you're sitting in a bad position, like I said, probably a good time to lighten up and make sure you have some ammunition. And if you have a secure job, don't even look. Just keep investing and dollar cost averaging, and don't worry about the daily or monthly or weekly moves. The interesting thing is March 31st looked pretty bad, which is the first quarter where you'll see like mutual fund statements go out. So people will start receiving those in the next week or two. That could push some extra selling if people overreact to how much their mutual fund dropped over the last quarter. But I guess we'll see, and we'll see what the markets do. Now, once I'm done panicking and crying and hiding under the bed, the other thing I plan to do is make a really good chicken marsala for a buddy of mine and my wife and son. I don't cook all the time. I used to have a restaurant and I still enjoy it. I went out, I picked up a really good bottle of marsala wine, which, for those of you who cook, or for those of you who don't know, if you ever want to, don't, you may not want to do it at home. It really flares up pretty good and you can burn things if you don't aren't comfortable with the fire really shooting up. But a really good bottle of Marsala wine makes a really big difference. And you have to get the sweet Marsala. The dry one doesn't work the same. You're not going to get that great flavor that you should. But I'm going to go start prepping the vegetables, well, the mushroom and the garlic, because I'm over anxious to get going on it later today. Maybe even heat up some of the chicken stock to get it ready and have it all prepared so I can just cook it. So I'm super excited about that, as much as I'm bummed that the markets are down so much. And to be fair, no matter how my persona, that's not what I'm thinking of, looks, I don't love that the market's down. I don't want it heard the wrong way. I don't like having a correction. My set it and forget it account is down pretty good, just like anybody else. But again, I really do set it and forget it. I think Amazon's a great company. They could correct a lot further. It could go into a rough time, but I want to own Amazon. I want to own Google. I want to own Chevron. They're companies that I want to have. The only thing I think about is, do I want to take the 10 or 15 stocks that are less of those top picks and move those into QQQ or VOO or a combination of them both? Outside of that, for my set it and forget it, I really don't worry about days like today, because my timeline really is about 10, 15 years out, as I get to the point that I hope to rely on that money more than I think of it as I hope that it continues to grow. When I chat on the channel, I'm usually talking more about the account that I trade, which, yeah, I like doing it, and I think I have a decent feel for market tops and bottoms and the moves of the market, but it's not what somebody should focus on. If you're really successful at that, that's phenomenal. But when I day traded at the exchange, there were huge advantages on the floor that I don't really see on the computers. It wasn't well, it was information, but not what people think about. I've talked about it once in another video. The real advantage was knowing who the different people in the pit were, and over time you start to know. I know some of the companies aren't still around, some are, but I knew that Mike was with Smith Barney, and Bryce was Morgan Stanley, and JP Morgan came through the back, and Goldman Sachs sometimes got filled by Killer, and all of the different banks and what was going on. And there were certain banks that were on headsets all day long with the market in New York, because we were the yen against the dollar, and in New York it's the dollar yen where it's bank traded, and we move in opposite directions. I even had an earpiece that I could hear the interbank market. But when I saw Bryce and Mike and Teddy and Killer all doing the same thing, and this would happen multiple times a day, I didn't know what was going on in the interbank market, but I knew something was going on, and the market was going to continue in the direction that the banks were pushing it. So if they all started to buy, I knew that I should buy too. And you would see this happen consistently day in and day out on a regular basis. And being able to see that was just such a huge advantage for having an understanding where the market was going to go. Now, when I say was going to go, I mean for the next 2 minutes. It just gave you an opportunity to make a little bit of money a bunch of times a day. Now, when you look on the screens at the stocks and the movements, it's just numbers. I have no idea if it's Goldman Sachs buying, or some retail customer, or a huge fund like Pershing or whatever. So I think not having that information really makes it a lot harder to make money on a day-to-day basis. I know people have success in it, but ever since leaving the floor, it's been a lot different. And my main success is just generally being invested, not trying to make the moves of the inner-day, because even when I'm successful, the amount is so little, it's more fun or silly than anything else. Anyway, like always, do me a favor, if you haven't already, smash that like button, hit the subscribe button, make some comments in the video. Tell me what you think of the market action today. Are you buying, or are you waiting to see a bigger correction? Do you think we have a bigger correction coming? Do you think that was it? If you're buying, do me a favor, tell me what you are buying. And if you like chicken marsala, make a comment about that too. It's one of my favorite dishes. Have a great day, guys, and I'll talk to you either later in the week or this weekend or something. Bye-bye.